Up next, we have VOX Royalty, and we'll be joined by Spencer Cole. And he's the VP at VOX Royalty. It's a new royalty company that's listed very, very recently. And it's my pleasure to introduce him and have him on the program here at SF Online. Spencer, go ahead and start sharing your screen, and it's your audience.
Zuerst vielen Dank für die Gelegenheit, heute zu präsentieren und mein Deutsch zu üben. Meine Schweizer Großmutter hat immer gesagt, Übung macht den Meister. Ich werde heute auf Englisch präsentieren, aber wenn Sie danach Fragen haben, kann ich auch auf Deutsch per E-Mail antworten. So, VOX Royalty is a new name in capital markets. We IPO'd 3 months ago, but we're far from a new company. We were established back in 2014, and since then we patiently built unique intellectual property, which includes the world's largest proprietary royalty database, a technical team of geologists and mining engineers on the front line of our deal evaluation, and a global sourcing network that for a company of our size is really unrivaled. Over the past 18 months, we have been the fastest growing royalty and streaming company on the planet. That includes all the way from the majors such as Franco-Nevada and Wheaton, all the way down to the new entrants. We've completed 16 separate transactions, adding 37 new royalties to our portfolio. And importantly, we've achieved critical mass. We've got a growing portfolio of 42 royalties and streams, with significant near-term catalysts organically coming through the portfolio. A little bit about our capital structure. In summary, very clean and very tightly held. So we only went public 3 months ago, so very little warrants and options to speak of. Approximately $100 million market cap, $8 million cash in the bank, and no debt. Importantly, management owns 15% of the company, and all of management contributed meaningful dollars into the IPO 3 months ago. In terms of our portfolio and how it's weighted, we are heavily precious metal weighted, and we always will be. So we're about approximately 2/3 weighted towards precious metals. In terms of our geopolitical risk, extremely low geopolitical risk. Over 3/4 of our royalties are located in Australia, and I'll go into that in a bit later in the presentation. And then in terms of the organic growth within our portfolio, we present investors with exponential growth in all the key areas where it really matters. In terms of producing royalties, so we expect to go from 3 producing royalties to 7 producing royalties over the coming 12 months. And then also in terms of revenue generation and cash flow on the bottom line that contributes towards. A little bit about our team. So Kyle Floyd, our CEO, founded the company back in 2014. Kyle previously ran the mining investment banking team at a group called Roth Capital. One of the most experienced mining investment bankers in the industry, historically worked with and advised all the majors and intermediate royalty companies, and essentially had the idea that back in 2014 that the royalty space was going to get more competitive, and that to be competitive in 6 years' time, you needed to have true defensible intellectual property and a technically focused management team, which is essentially what we've built today. Simon Cooper, who's our EVP of Corporate Development, he's both a geologist and a mining engineer. He's worked at some of the most interesting mines around the globe, from the Congo to Kyrgyzstan to Australia. Just an extremely experienced deal sourcing individual. Myself, I'm a mining engineer and reformed mining investment banker. I've worked both with major mining companies such as BHP Billiton, and then investment banks such as UBS Investment Bank. And then our fourth business development professional, Riaan Esterhuizen, he's a South African by birth, but naturalized Australian. He's one of the most renowned exploration geologists that we've come across, certainly. And he's worked right across the list of majors, from Rio Tinto, Randgold, Goldfields, all over the globe. And so I think Rian and I joined the team approximately 18 months ago through the acquisition of a company that we co-founded called Mineral Royalties Online, which I'll touch on in a later slide. Importantly, not only is our team extremely technically focused, we've strategically been located around the globe in major mining centers. So Kyle's based in Denver, Simon's based in Grand Cayman, where our corporate head office is for tax reasons. I'm based in Toronto, and Rian's based in Western Australia. In addition to this business development team, we've also got a dedicated legal counsel and full-time CFO, and all 6 of us really are out there on the front lines sourcing deals. This slide should be fairly familiar for most of the attendees on the webinar, but in summary, if you've wanted commodity exposure over the past 10 years, royalty and streaming companies have been the best way to get those risk-adjusted commodity returns. And that's for a few key reasons. Most notably, the risk-adjusted returns, I guess, you get all the upside associated with exploration success, production expansion, mineral resource growth, without any of the downsides of capital cost overruns, operating cost inflation. It's a pure way to get that asymmetric upside in the commodity landscape. It's outperformed spot metal. It's outperformed all the various commodity-linked benchmarks you can put it against. I guess the main message that we wanted to take away from this slide is we certainly expect to outperform the royalty companies over the coming years. A few names that are probably well known to all of you. What we were interested in when we ran this analysis was everyone knows that Franco-Nevada, Wheaton, and Royal have considerably outperformed the industry. But what we found particularly interesting is if you look at their first 3 years as listed companies, that's where they've really done a lot of their most productive growth from a share price performance perspective. So I guess as we look ahead for our next 3 years, we certainly expect that the next 3 years will be even more productive than the last 2 years of exponential growth we've experienced. As I mentioned earlier, we have been the fastest growing royalty company globally over the past 18 months. And that's including the entire industry, from the new entrants through to the majors. We've completed 16 separate royalty transactions to bring in 37 new royalties. And that really is just the tip of the iceberg. Our business development pipeline is overflowing with opportunities. This is because of a few key reasons. Our business development team is 4 key professionals on the front lines sourcing deals, which frankly speaking is larger than most of our intermediate peers. But also what I'll touch on in a later slide is our business development efforts are really enabled by our intellectual property. We hold the world's largest proprietary royalty database, and we use that to inform the majority of our deals, which by and large are done on a bilateral, one-on-one, non-competitive basis. So a little bit about our intellectual property. The words intellectual property and mining don't often get thrown around together. But over the last 10 years, Rian and myself have been quietly building what is now the world's largest proprietary royalty database, which numbers over 7,000 private royalties now. And this royalty database gives us 2 key sourcing edges. The first is it gives us first mover access to deals. So of the 16 deals we've done in the last 18 months, 15 of those deals, we've been the only royalty company at the negotiation table. So we're the first one to the deal, and we're the only party negotiating directly with the royalty holder. And that's in no small part because of this proprietary royalty database. Not only are we the only party, the only buyer at the table, but also the counterparties that we're buying royalties from are highly unconventional. We're buying royalties from telecommunications companies, hearing aid companies. A month ago, we bought a near-term producing gold royalty from an automotive parts company. These are all unconventional royalty holders that we've identified through our proprietary royalty database as being, potentially motivated sellers of non-core royalties. The second key sourcing edge that this proprietary database gives us is incredible due diligence speed. What you see on the right-hand side of this slide is just a very small fraction of our overall global royalty database. Because the database isn't just a dusty spreadsheet that we run through. It also has a spatial viewer, similar to Google Earth. So when we're responding to intelligence on the ground or a new discovery, we go straight into this spatial viewer and we can view in a matter of minutes, is there a royalty over the new discovery? Who holds the royalty? What are the terms of the royalty? And importantly, how much of that new discovery or how much of that ore body is actually covered by the royalty? As you're all probably aware, when it comes to acquiring and investing in royalties, the devil is in the detail. And you could have what looks like the world's best royalty, but if it misses the main ore body by 50 meters, it's essentially worthless. So routinely, we're able to identify, evaluate, and negotiate on royalties before our competitors even realize a royalty even exists. A little bit about our current portfolio of 42 royalties and streams. So we've achieved critical mass already, despite the fact that we've only been listed for the last 3 months. Our portfolio is biased in a few key areas. As I mentioned before, we're overweight precious metals, and that will always be the case. But importantly, first and foremost, we are value focused. I guess we see historically, over the past couple of years, some of our peers have been extremely successful in the capital markets. But essentially what they've been doing is just winning sale processes for royalties and royalty portfolios that have been shopped by investment bankers, paying top dollar and growing, by paying top dollar in competitive auctions. We're the other end of the spectrum. We're targeting bilateral, one-on-one, quiet royalty deals where we can find deep value for our shareholders. And that means that we're not exclusively focused on precious metals. We'll always be biased and overly overweight, approximately at least 2/3 precious metals. But for the rest of our portfolio, if we find a fantastic copper royalty at deep value, we're never going to walk past it. Not dissimilar to Franco-Nevada. They will always pick up non-precious metal royalties where they find deep value. And we think that's a fantastic business model to follow. I think I'm running out of time. So I might hit some of the high points. Exponential growth in our portfolio in terms of producing assets. Incredible list of operating partners, multi-billion-dollar operators. Near-term catalysts of projects coming into production. And then why VOX and why now? We've built a business that is differentiated in the royalty industry. We've got critical mass of over 42 royalties and a huge amount of M&A catalysts and organic growth catalysts within our portfolio of 42 royalties. Sorry to rush through towards the end. I'd recommend to go to our website, voxroyalty.com, for further information, and I'm happy to answer any questions anyone has.